We're continuing our coverage here at the Mines and Money Conference taking place in Toronto. And with me today is Chris Barry. He's a speaker here at the conference, but he's also president of House Mountain Partners and co-editor of the popular newsletter, Disruptive Discoveries Journal. Chris, it's always a pleasure speaking with you.
Thanks. Nice to see you again.
Now, I know you're the king of the energy space, but I'm going to start and get your thoughts on gold, because last time we spoke, you were bullish gold. Thoughts on the metal today?
Yeah, I think, look, again, it's not really my area of focus, but with so much uncertainty in the world, obviously, there's a big issue in the United States tonight with the first presidential debate.
Yeah, you'll have your popcorn ready.
Popcorn at the ready. Whether or not that has a material effect on the price of gold, it remains to be seen. I think it'll be a very interesting 90 minutes to watch. I do think that, supply and demand and just general uncertainty, things like negative interest rates throughout the world, calls for higher gold prices going forward, but not really sure where that levels off. But I'm very comfortable where it is right now.
Okay, so you're a speaker here at the Mines and Money Conference. You mentioned energy is really your space. So what's your message? How do you invest in it these days?
Well, I've spent about the last 6 or 7 years really looking at a lot of the battery metals, the lithiums, the cobalts, and the graphites of the world, and it's clear to me that despite the funk that a lot of the mining sector has been in for a while and in some ways remains in, it's clear that the lithiums and the cobalts in particular are going to grow in terms of demand and grow well ahead of global GDP. And so that's really rooted in vehicle electrification and energy storage. So what I'm doing right now is spending a lot of my time really understanding the entire lithium supply chain. So from a supply and demand perspective, who is forecast to come on stream between now and 2020? What are the cathode makers, the battery makers in South Korea and China doing to ramp up their capacity? What are the automotive manufacturers doing? And so everybody along that supply chain is dramatically ramping capacity, and they're doing it right now. This isn't sort of a projection out to 2030 or something.
When do you think we would see all cars being battery operated?
Well, I don't know if you'll ever see all cars being battery operated. That's an interesting question, and the issue is that renewable energy and the technologies behind it continue to get cheaper. I've talked a lot about the difference between good deflation and bad deflation, and so we're seeing the price of solar collapse. We're seeing the price of lithium-ion batteries fall by about, 10 to 14% per year. So arguably by the middle of the next decade, maybe a little sooner than that, you'll start to see a point where a lithium-ion battery, or I should say a full electric vehicle, is cost competitive and profitable relative to an internal combustion engine car. So to answer your question specifically, it's an exciting time right now, but I think the real inflection point won't be for a couple more years.
And I know we've spoken about this in the past, but I think it's important for investors to understand how to get into the lithium space. It's not easily accessible like the gold and silver space. How do you invest in lithium?
And you're absolutely right. It's not easy because there really aren't any pure plays, with a couple of minor exceptions. And so what I would recommend doing is looking at the oligopoly in lithium as it exists. You have 3 or 4, maybe 5 producers of any size, and you really want to understand them and you want to understand their business. My message to anybody looking in the junior space would be the following. I would ignore the high prices that we're seeing in lithium right now. They're a signal to a certain degree, but what you really want to focus on is cost of production. Because when you have the lowest cost of production, that's how you compete with the oligopoly.
So it's still a good time to get in?
I think, look, we had this conversation a few months ago, and it was a lot better then. You've seen some huge share price gains in a lot of the juniors between then and now, and they seem to have leveled off somewhat. I think it was a quiet summer, but I think that, taking a sort of a 5-year view of lithium, I think it's going to be very profitable going forward.
What about uranium? Is this the bottom?
I've been saying that for a while, and it sure feels like it. And again, you just look at the cost of production of the chemicals of the world, what's going on in Kazakhstan, and ultimately, $24, $25 spot uranium is just not sustainable. And so I've talked earlier about, a 30% spike in the price of uranium out of the next 18 to 24 months. I still stick by that because I think a lot of people are very complacent in the space right now.
Chris Barry, thanks for stopping by. Always a pleasure speaking with you.
Absolutely.
And thanks for watching our coverage here at the Mines and Money Conference in Toronto. We'll have more for you, so be sure to stay tuned to Kitco.com. Chris, thanks.